Well, good morning and welcome to BQ Live or Bloomberg Quint Live. I'm Menaka Joshi.
You're watching Indian Open. I'm Neeraj Shah. Morning, Meera. Good morning, Ira.
Good morning, everybody. These are our top stories this morning. Logistics companies get infrastructure status, giving them access to easier and possibly cheaper credit. Reliance Industries raises $800 million in an issue which is priced the cheapest for any Indian company. German Chancellor Angela Merkel says she'd rather go to the polls than head an unstable government.
Well, and the trade setup for the day looks like we'll have a start which is marginally in the green, taking off from where the US markets left off in trade yesterday. So some bit of green out there. Asia is trading with a fair bit of green, and we'll start off maybe about 30-35 odd points higher. At least that's what the SGX Nifty seems to be indicating. So I'll take off green. That should be supportive for our markets. Remember, it was a tepid day of trade yesterday. We corrected ever so marginally in trade on very thin volumes as well, I might add, in trade yesterday. So an inconclusive session of trade. Sadly, one thing to notice, while Friday saw a bit of positive FI flows, it was a solitary day on Friday because yesterday too we had a small decline on the FI side as well. So the hopes that the rating upgrade may lead to continuing FI flows was very, very short-lived. Too early to comment. Let's see what happens over the next few days, but clearly it didn't last for longer than a day. I think in terms of stocks, you just need to look at cement stocks in terms of trading positions, because there were a lot of short positions built in cement in trade yesterday. Naturally, so I might add the news, both the pieces of news flow not too positive. So while the cash market saw some selling over the course of the day, I think watch out for the cement stocks in today's session as well. The short positions were fairly exaggerated on stocks like Shree Cement, for example, or for that matter, even Ambuja. So let's wait and watch what happens to those. I think Harsha pointed out a very interesting chart of MSCI. Harsha and Ira pointed out a very interesting chart of MSCI on the show yesterday. Just want to bring that up before we move on to specific stocks. And apparently, if you look at the 10-year perspective on the MSCI Asia Pacific Index, there are twin peaks that are being formed. We are now nearing those levels, and traders use these levels as indications of what could happen in the near term. So do watch out for the Asia Pacific Index by and large, but India within that basket as well, because almost everybody, and we'll talk about that, almost everybody that we've spoken to in the last few days have stated that while India is a great long-term story, valuations are a bit rich and therefore money could not come in. So do watch out. The fairly good indicator as well has worked in the past. Let's wait and watch what happens there. Just very briefly in terms of specific stocks, there are a bunch of names. I've picked up 4 or 5 which I thought would be the key ones. Needless to say, logistics stocks would be in focus from a trading perspective, and we'll speak to a whole host of companies about what's the benefit there, but sentimentally too there will be a bit of an impact on these companies. So anything from a TCI to a Gati to all cargo, all of these should ideally benefit a little bit in the session today. A mid or small cap company, BCL India. It's a North-based company based in Punjab, but Equity Intelligence Fund and Purunji Veliath himself have bought shares. This name evokes reactions on the markets on specific stocks. BCL India could well be a stock that will react today. Prabhat Dairy, wherein promoters have purchased over 3.5 lakh shares. Remember, the insider trades that Bloomberg Quint gives out on the website gives out a whole host of these companies wherein promoters would have given some action. But this one stood out, purchased in trade yesterday. So do watch out for Prabhat Dairy as well. And yeah, I mean, there is Merck Electronics on results, or Satin Credit Care because they've gotten the housing finance subsidiary, or IIFL, which will meet a clutch of investors, including T. Rowe Price. So all of these could well be in focus at open today.
All right, you should be watching European politics as well. Angela Merkel saying she does not want to form a minority government. The president asking for all the parties in Germany to come back to the negotiating table. What it means, I think there was a poll done yesterday on if they went back to elections, whether the outcome would be any different, and they said no. The voter base is just as divided as it was when it polled a few weeks ago. So unfortunately, there seems to be no easy solution in sight in Germany, and we've seen the euro rebound yesterday and recover somewhat from that. So markets seem to be a little bit sanguine, but you've got to watch Germany closely, because that's the big pillar that's held up the European Union the last several years that it's been in financial crisis. You want to watch Germany. It's a big trading partner for most of the large countries in the world. So the stance it adopts on immigration, on trade, all of these things will become important, and we'll know that only when a new government is formed, as and when that happens. So we're watching Germany very closely. We also have a very bullish voice. You were talking about trade setup, Neeraj. A very bullish voice coming in from Uday Kotak this morning. Those of you who've been to the BloombergQuint.com site, Mr. Kotak making the point that this is a once-in-a-lifetime opportunity for those interested in stressed assets in this country. I'm sure we'll talk a little bit more about that through the course of the day today. But that's an interesting conversation with Uday Kotak that's up on BloombergQueen.com. Let's get a sense for you on what's on First Word this morning. You just heard Neeraj say that the view coming in from foreign investors when it comes to the implications of a ratings upgrade for India is not necessarily very, very encouraging, at least in terms of flows. So he's going to give us a bit of a lowdown on what exactly they said to him. He's been speaking to a whole bunch of them through the course of the weekend and yesterday. We're also going to talk about foreign investor participation in the primary markets versus the secondary markets, and some data there will have your eyebrows raised. Reliance Industries has managed to price its $800 million bond issuance at the tightest level ever by an Indian corporate. So we'll talk a little bit about that. And of course, logistics companies now getting the benefit of infrastructure status, what that means for them and which companies stand to gain the most. We'll get you the lowdown on that as well. But we'll kick it off first with the Moody's upgrade for India and what that's meant for how foreign investors are viewing the country. And Neeraj, you've been talking to a whole bunch of them.
Yeah, so we spoke to 3 on record in trade yesterday itself, and starting off with Abhijit yesterday morning. And I think the verdict was unanimous in the sense that the common theme was that valuations in India are rich. Now, Kenneth Akinteve, who is the senior investment manager at Abhijit, said that while this is positive and this means that there was a bit of a contradiction in what he said as well, but he said that yes, he's bullish in the near term, but he does believe that valuations are very rich for the equity markets in the near term. But hey, he said that I'll be happy putting the money in the bond markets. The last 3 years, the bond markets, the Indian bond markets have given enough and more returns, risk adjusted, for us to think of putting in the equity markets. So specific pockets may have done well, but as a large FI looking at India, the bond markets have given enough returns. And from the looks of things and the valuations which the Indian markets are perched at, why should a large long-only investor, never mind his overall exposure to India, look at Indian equities at these levels? So very bullish on India over the long term.
But that's an odd argument, right? I mean, Ira would argue that as well. I would think that what you saw happen in the bond market over the last 2 years is not going to necessarily replicate itself here in India for the next 2 years, right?
Probably not.
Yeah. So, I mean, you saw, lowering yields to whatever extent that the central bank has done so.
And now they may harden, yes.
Well, so yeah. So, I mean, to say that I'd rather invest in the bond markets than the equity markets sort of seems to ignore the economic reality of India.
True, but so I think his reference point was that he believed that if you invest into India at these levels, you would probably see a correction first before you start making gains again, and maybe a 1 year period, you might not make returns commensurate with the kind of risk that you're taking in equities. I think that's what they were probably getting in, but as I said, he was contradictory because he believed that India is attractive in the near term, but hey, even valuations are a bit expensive, so we may correct. So there's a bit of a contradiction out there, but yeah, he was probably one of the most bullish voices out there out of the 3 that we spoke to. Bill Maldonado, a moderate voice, believed that yes, the markets are expensive, all situations are not expensive, but we'll try and take a look at the Indian markets only when there is a bit of a correction that comes in. However, he believed that it will be difficult to imagine a correction happening in India individually without there being correction in the region. So if at all there is a correction that comes in India, they didn't believe it will be because of India-specific factors. They believed, or HSBC believes, it will be because of something that could bring about a bit of a correction in either the EM pack or the Asia Pacific pack, or both as a reason. So it had to be global in nature. The most bearish, I think, of 3 at least, was Guy Steer, who said that, hey, this doesn't mean anything. Long-term stance doesn't change, or the near-term stance also doesn't change. And I think I was hearing that conversation as well. I think after a couple of questions,
he had no interest in talking about it. He's like, yeah, it's so valued, we're not interested. We'll see when it comes down.
Yeah, so this was very interesting. But I think, as I said, the common theme that came to be is that, yeah, this is great. It's probably great for the long term, but for the short term, valuations are expensive, and therefore they didn't expect money to come in.
All right, so that's how foreign investors are viewing the ratings upgrade that the Indian economy has seen last week. Now, a lot has been said about FIIs selling Indian equities over the past few months, while the secondary markets may have lost somewhat of their sparkle for FIIs for the same reasons that both Neeraj and Neera articulated right now. Shraddha has looked at some data to figure out what exactly has caught their fancy this financial year. Shraddha, they're preferring primary markets to secondary markets?
Well, yes, and we will see that through the numbers that we're showing. But first, this is only numbers with respect to equity markets. We're not talking about debt markets here. So just clarifying, because there have been a significant investment into the debt bit as well. So if you look at the foreign investment picture in the secondary market so far in FY18, that is April onwards, you will see that in totality they have sold about 21,000 crores or so. And the months of August, September and October, these 3 months are periods of heavy outflows, a total outflow of about 39,000 crore or so coming in from the FIs in the secondary market. But the entire picture changes if you look at the flows that have come into the primary markets via equities. And before that, just a disclaimer that the secondary primary markets don't include only IPOs. Of course, it will be the largest component, but it includes IPOs, your OFS, your FPOs. So all of that combined, they have put in about 72,000 crores or so. Earlier months saw higher inflows coming in. It cooled down a little bit in August, but you look at the months of September, October and November, these 3 months are the time that we have seen the 4 large insurance IPOs coming out, and hence you could say that to some extent you could have seen the FI inflows shifting from the secondary markets to the primary markets. In September you had the SBI life insurance IPO, you had GIC in October, and you had HDFC Standard Life and New India Assurance, both that came in November. These were some of the largest issues this year. And for example, SBI Life Insurance, the QIB portion was subscribed 12.6 times. But of course, we cannot say that all of that money came from foreign funds, because you would also have Indian funds that were invested. But this is just to give an example of the kind of IPOs that we have seen, and then probably that's has caused FIs to shift focus from the secondary to the primary markets. So net, while we are talking about net outflows, or when we've been talking about FIs pulling out funds from Indian markets, well, primary markets have been buoyed, and we have seen inflows to the tune of 72,000 crores or so.
So they sold 21,000 crores in the secondary markets, and they bought 72,000 crores. Yeah. Nice. Interesting numbers.
I guess the net is still negative.
No, they sold 21,000 crores. They bought 74,000.
74,000.
Yeah. So the net is positive. And that explains the valuation issue, even though some might argue that IPOs, many of them are also quite richly valued.
Yes.
Yeah.
Where do you look if, the top stocks in the country are already highly priced? So.
Yeah.
Okay, thanks very much for that, Shraddha.
All right, I think just a brief note, since we're talking about foreign, this is foreign fund flows into India, but what I'm talking about is Indian companies raising money abroad. So Reliance Industries went to the dollar bond market yesterday. They were really quick off the block. You had a rating upgrade a day before, and they went into the market on Monday. They've priced their issue really finely. I think those watching the overseas bond markets will take note of that. We understand this morning the issue was open yesterday, closed late last night. We understand that the issue priced at 130 basis points above US Treasuries. The last, the tightest pricing was for a public sector company, which was ONGC, which had priced an issue at about 140 basis points above Treasuries. That is a 10-year issue. Reliance has managed to better that and price it at 130 basis points above Treasury. Just to give you context, the last time Reliance, not the last time, but in 2015, when Reliance raised 10-year money in the dollar bond market, they had priced it at 240 basis points above Treasury. So you've seen a significant tightening of spread. Great, sort of strong book that got built, and they managed to close it at 800 million. Bloomberg News had done a story yesterday saying that apart from Reliance, there are a whole bunch of other companies also considering going to the dollar bond markets. RCF was one of them. Adani Abbott was the other one. If you look at the overall dollar borrowing scenario for this year, about 12 billion has already been borrowed, and the approvals are for a far higher amount. But even at that 12 billion number, you've done almost about 50% more than what you had done last year. So that market has been active through the year, and the rating upgrade for anybody who does see a real impact, it will be the guys who are borrowing in the dollar bond market.
Yeah, well, not speaking necessarily to the credit worthiness of Reliance, which is, as they say, unquestionable. But there's an interesting equity report out this morning which suggests that EBITDA will double between now and 2020.
Yeah.
And I thought that was quite fascinating in the sense that they're expecting all the petchem expansions to kick in. Doubling of EBITDA for a company of that size over 3 years. is, is something you should watch closely for. They've, of course, also been quite delighted with the fact that the telecom business
has done rather better than what people anticipated.
Well, on accounting fronts, but yes, nonetheless, yeah.
Yeah, that's true. They're bullish on the near term as well. I think that's the steepest target on the street, if I'm not wrong, is what Goldman has on Reliance. I think 1250, if I'm not wrong, or thereabouts.
Oh, really?
Yeah, I think, unless I'm very wrong, and Sumit will probably speak about this note a bit later on in the show as well. But unless I'm very wrong, in the near term, this is probably one of the strongest price targets that I've seen in the recent times.
That's the Goldman note. Well, you'll have to wait to watch a little bit more about the Goldman note later on in the show. Okay.
Okay then, from Reliance, which is the first of the block, as Ira said, to logistics. And they have gotten some good news yesterday, infrastructure status. For a lot of you are wondering, what would this mean for companies? Sumit is here to give us the details. Sumit, good morning. It's a good morning for the logistic companies for sure.
Yeah, it is a good morning for them, and good morning to you also, Neeraj. So what government has done now is they have changed the earlier transport category to transport and logistics category, and have included logistics infrastructure as an infrastructure subsector in the list. So transport and logistics include roads, bridges, ports, shipyards, inland waterways, airport, railway tracks, etc. But what is new and what has been newly added is the logistics infrastructure. So what does that include? It includes multimodal logistics park, including inland container depot with a minimum investment of 50 crore rupees and a minimum area of 10 acre. It also includes cold chain facility with a minimum investment of 15 crore rupees and a minimum area of 20,000 square feet, and warehousing facility with a minimum investment of 25 crore rupees and a minimum area of 1 lakh square feet. So how does it benefit them? How does it benefit the logistic companies? Now, the sector is now likely to attract more funding at competitive rates. Having an infrastructure status would help the logistic company to get credit at marginally lower interest rate and on a long-term basis. It will also give sector access to large amount of funds through external commercial borrowings, and this move could also attract the large pension funds and debt funds to invest in the sector. Lastly, it will also reduce the cost of borrowing for the developer. So why was this move needed? Now, logistics cost currently in India is very high. Now, India spends around 13% of GDP as logistics cost, which is more than what US and Germany spends. US spends around 9.5% of their GDP as logistic cost, while Germany spends around 8% of their GDP as logistic cost. Now, this is according to a McKinsey report. Now, as logistics cost is high, Indian goods become less competitive in the global market. So this move of including logistics in the infrastructure will not only help the logistics sector to get funds get funds easily, but also help these goods make more competitive in the global markets. Now, there are a bunch of logistic companies that will benefit from this, but to name few, it will include TCI Express, Snowman Logistics, because it is a cold chain player, Mahindra Logistics, then it will also benefit All Cargo, Blue Dart, and also Container Corporation of India.
Thanks a lot for that, Sumit. Let's try and figure that out with Shashi Kiran Shetty. He's the chairman and managing director at All Cargo Logistics. And he joins us right now on the show. Mr. Shetty, good morning. Thanks so much for joining in. Tangible benefits as a result of this move? We all know it will benefit, but can you outline for us the tangible benefits?
I think one of the main benefit going to be the infrastructure status. I think one of the biggest issue that is facing the industry is low margin, and when you are in a low margin business with a very high cost, it becomes extremely difficult for people to make investments unless the margins are so high. So I think that's a great move, has been an industry demand for a long time. Second, of course, is the GST will consolidate the entire logistic movement. I think that will throw tremendous opportunity in the years to come. It's not going to happen overnight. I think it is going to be a 2-3 years play. I think a very good time to be in the logistic industry for sure, and a lot of interest from international players and international funds to give money to companies who are well established like ourselves. I think it's a great opportunity.
Mr. Shetty, does this substantially change your cost of funds in any way? Would you talk us through that?
I don't know. I mean, we'll have to figure that out. What kind of a reduction in the interest cost, maybe a couple of basis points, a couple of 100 basis points. And So we'll have to figure that out. I think it's too early. I think this happened just a couple of days ago. So we'll have to, we're not yet spoken to anybody yet, but let's see how it goes.
Do you at All Cargo have any big fundraising plans at this point in time that this could immediately benefit?
Yeah, we have announced to build a few logistic parks around the country, utilizing our existing land bank, which we've been, we acquired over the last few years, and the investment size is anywhere between 700 to 1,000 crore over the next 3 to 5 years. So it's going to be a big benefit in the interest cost.
How much of that would you be raising through debt? How much equity?
A substantial portion is their debt because the company is quite under-leveraged. And I think having said that, we may at some stage also have to raise equity or bring some global partners to co-invest in some of our projects.
Would you say that the funding needs, especially from the debt point of view for the entire industry at this point in time, would be considerable because players like you would be in an expansionary mode, especially to capitalize on the GST-led opportunities?
Yes. Sorry, what's your question again?
My question is that would you say that the industry as a whole would be looking to raise substantial funds via debt to capitalize on GST-led opportunities?
Yeah, I'm sure many companies would consider that, whoever has a big plan, because in this business, things have also changed. I think there is no room for small, little facilities to be built. I think what is required is mega facilities, and those need mega funding. So, see that, like I said right from the beginning, I think the industry is also going to get consolidated in some way in the major infrastructure development. That's where I think the big players will have a role to play. It will not be as fragmented as it used to be in the past.
Are you looking for consolidation opportunities?
We always, look at that, and that's one of our core competence within the organization to consolidate, which we have successfully done globally, and we are also looking at such opportunities in the country as well. It's an ongoing core competence of the company.
All right, we'll leave it there this morning. Thank you very much. That's Shashikiran Shetty of All Cargo Logistics telling you that there will be a benefit, tangibly so, as Neeraj pointed out, especially as they're looking to raise substantial amount of money to, build out their logistics parks across the country. But he wasn't able to immediately quantify how much the reduction in terms of cost of funding will be in the days to come.
Well, let's wait and watch. We'll speak to a whole host of other logistic players during the course of the day, so you need to stay to Bloomberg Quint for that. But for now, on First Word, that's all that we have. We will talk a bit later on with Manish Sonthalia of Motilal Oswal Asset Management about markets and macros. That's a conversation you don't want to miss. The demand for personal credit with Shanti Ekambaram of Kotak Mahindra Bank, and about the transition to a small finance bank with Ghosh of Ujjivan. But full tilt towards the day's trade today. Let's start off with Agam Vakili, who's standing by with a quick check of what the derivative space is looking like this morning. Morning,
Good morning, Neeraj. Well, consolidation continues when it comes to the Nifty. Very little change in terms of open interest, or for that matter, the index itself. And in terms of the Bank Nifty too, what we're looking at is, again, just about a % increase in open interest. But when it comes to the volatility index, that again remains in that band of 13 and 14, currently at 13.4, not much change there. And neither have we seen too much change in the Nifty put call ratio, which again remains at around 1.23. But moving in terms of changes in open interest, as I was suggesting, it indicates consolidation between the mark of 10,200 and 10,500. So that's the 300-point range that we are expecting the Nifty to trade within, at least for the next 3 or 4 sessions. That said, in terms of your changes in open interest and your F&O band, we have 2 new entrants that will take the total to 13 stocks, which will be in the F&O band. So with Just Dial and TV18 as new entrants, and of course we are watching out for a lot of these Tata Group companies which have seen a substantial amount of longs building in. So Tata Power looking at nearly 15% addition towards fresh longs in open interest. Similarly, Voltas is the other counter which has seen about 30% addition towards accumulation towards fresh longs. So a host of these counters, relatively smaller counters, that we will be watching out for as we move into today's day of trade.
That's a clutch of names which are interesting as well. Agam, thanks for putting that into perspective. Let's get in Abhijit Phatak, Director at Definite Solutions, who joins us right now on the show to talk about the derivative space. Abhijit, good morning. If you look at the calls and the puts, seems to suggest that the expiry may be in this broad range of 10,200 to 10,500. Would that be a fair assessment?
Yeah, good morning, Neeraj. Actually, I would narrow it down further to 10,250 and 10,350. And above 10,350, then it can go towards 10,500. So that is a tradable breakout. So instead of, restricting yourself to 250 points, it's better to restrict to 100 points. And beyond that, either below below 250 or above 350, there is a trade in that.
Okay, so how do you play this, Abhijit? What kind of strategy can somebody initiate today until this current expiry?
For now, what I am seeing from the straddle chart, I also plot charts of straddles. 10,300 call and 10,300 put. So together, when the straddle is plotted on a chart, it is showing weakness, and right now it is about 150, 155. So if one gets to short it for a total of 150, 155, so those shorting a 10,300 call and shorting a 10,300 put, where the total premium is about 150, 155 with a stop loss of 20 points, 175. That can be sold, and as long as the Nifty remains within this range, this straddle can come down maybe to 130 or 110.
Okay, so you would initiate this strategy only if the total premium inflow is about 150 to 155, in and around those ranges.
Yeah, because the stop loss is 175. So as long, even if it is at 160, 165, that is not a problem because the stop loss is 175.
Okay. Now, Abhijit, before we get to your specific strategy, just want to get in one quick view on the cement counters because they saw heavy shorting in trade yesterday, at least until 2 p.m. Shree Cement, Ambuja, etc. Were fairly active and on the short side. Would you expect some more downside there?
Yeah, problem was because of the news yesterday, they have opened gap down, and as long as that gap is not filled, they'll remain weak and they'll remain short on rise. So right now, it's not a time to go long in the cement stocks unless they show, from the lower levels if they show some buying, which was not seen yesterday at all. So any rise will be used to create fresh shorts, and as long as that gap, yesterday's gaps in all those stocks are not filled and crossed. Okay,
one last question, Abhijit. What would be a stock-specific strategy for the session today?
One stock which is looking good is Hexaware. Some mid-cap IT stocks are looking good. Hexaware, Mindtree, these kind of stocks might show some buying interest today. So going long in them with the stop loss below yesterday's low, they might give a good trade today for the intraday levels.
Okay, so a small intraday strategy. Hexaware is one from Abhijit Phatak. Keep a stop below or at yesterday's low and go long on it. Hexaware could be one, there could be some others as well. Abhijit Phatak, many thanks for joining us and giving us that perspective. Good having you as always. Well, that's the view from Define Edge. By the way, a clutch of other mid-cap IT names today did very well. The likes of Polaris, for that matter, or Nucleus Software too, were fairly active in the session today. What is not so active though are the commodity markets, at least in close yesterday. They were trading fairly flat. Crude too, unless I'm very wrong, has given off some of the gains. But Pradeep Johnson to talk more about that and to take the show forward. Pradeep, good morning. Can't say that commodities are active. They were anything but active yesterday.
Good morning, Neeraj. That's true because we are waiting for some of the key developments politically. I can say that both for crude and for gold. To talk about crude first, in fact, oil prices slipped on Monday. Market is waiting for the outcome of the OPEC and non-OPEC meeting next week. So I think for next 8 to 10 days, markets will have to live with this uncertainty. Reason being that OPEC and some 10 odd non-OPEC countries, when they meet next week, Russia is going to play a very important role. And while there is a consensus among OPEC players, Russia is still holding cards close to her chest, and we really don't know whether or not Russia will support the extension of production cut for another 9 months. To talk about gold, again, gold yesterday fell because of the political uncertainty in Germany. That, in fact, affected euro. When euro slipped, dollar went up, and as gold trades inversely to the dollar, gold actually declined by 15 to 20 odd dollars per ounce. If you look at other metals, base metals were mixed on LME. Aluminium and copper declined. Lead, copper and nickel in fact moved up. Lead and nickel in fact moved up, and aluminium, if you look at it, was in fact near 3-month low because of China output cut and output data, in fact, if you look at it. So that is one base metal which really looks weak, but base metals are really mixed, and there is weakness in crude and dollar this morning.
Okay, that's interesting. Watch out for the commodity pack. Keep in mind, for viewers who are tuning in right now, the Asian markets are trading with a fair bit of green, and the SGX Nifty has indicated that we'll start off marginally higher. About 1/3% is what the SGX Nifty is indicating. So expect a good start to our markets in the session today. Let's see if that lasts or no. But if the call and the put ranges are to be believed, we're just speaking with Abhijit, Pradeep, that the range could well be in or around this 10,000. So the options suggest 10,200 to 500. Abhijit was comfortable narrowing it down to 10,250 to 10,350. And which would mean that experienced traders like him, for example, are betting that the expiry or the next 7 days until the expiry could well be very lackluster. We will not have pronounced movements either direction.
So after this up move of the day before, when we went all the way close to 10,350, in fact, if you remember, even Vishwesh yesterday or day before was suggesting that we should sell straddle. So the option traders are basically selling straddle at around 10,300 being your mean, or 10,350 depending upon where the market is at that point of time. And I think they believe that they'll be able to make money, which means they're all trying to play a range, neither a sharp up move nor a down move, at least on index, which means focus is going to be a lot more stock specific into mid cap and small cap. Yeah,
I would reckon. Yeah, I was just about to add that. May not be too many of the index names, but definitely on the broader end of the spectrum, we'll see some action there. And well, believe us, I mean, there has been some action for all of us who've been watching this market very closely in the recent times. There have been a clutch of names at the broader end of the spectrum which are doing well. I think the key is, just before we get in our research team members, the key is what's happening to select pockets like IT and real estate, wherein the larger names or the perceived larger names are not doing as well as the mid-cap names are. So again, in real estate, I would like to qualify or define. I don't mean DLF necessarily. A Godrej Properties or an Oberoi have not had such a great move as what a Kolte Patil or a Purvankara, etc. have had at the mid-cap real estate end of the market. Similarly, in IT, the large cap has been lying flat or down. But look at what's happened to a Polaris, a Hexaware, a Nucleus Software. The gains have been astounding.
Yeah, and today there will be more newer sectors maybe like logistics. Although yesterday it kind of moved up. Market has been anticipating something, looks like.
Yeah, yeah, it's been fairly interesting. Anyways, so we'll talk more about this with Mayuresh. Joshi will be joining us any moment from now. But it's a good time probably to just take a look at what all the key newsmakers would be in the session today. There are some results that came out as well. And there is a large strategy note that has come in from CLSA, if I'm not wrong. And there is a Jet Airways analyst meet, so much more to talk about. Let's get in our research team members to talk about all of that and more. And Darshan, Somit, Shraddha, as well as Nikki join in to speak about all of these and more. And good morning to all of you. Well, we've heard from Shraddha and Somit already on a bunch of things, but I think let's start off with the big picture scenario that CLSA is giving out, Darshan, on the strategy note.
Yeah, so there are two strategy reports that have come out, one from CLSA and one from UBS post the conference. So let's start with CLSA. They believe that, you know, the trend or the positive trend that they believe for housing will continue. So they believe that their interactions with the government agencies do indicate that the spends will increase over the next 2 to 3 years. They are saying that developers expect affordable launches to pick up by early 2018. So the stocks that they're bullish on this housing theme include the housing finance companies, Astral Poly, Crompton Greaves Consumer, as well as Godrej Properties. So CLSA is bullish on housing as a theme. UBS at the end of the conference came out with 4 key takeaways. The first being that they don't expect the bank recapitalization to lead to a significant amount of capex recovery. They're saying investors are concerned about the valuation currently, but are looking at bottom-up ideas. They expect a good majority to vote for BJP in the 2019 election. And the fourth key takeaway is that they do not foresee a big fiscal expansion pre-elections that will come in. The top picks and what they are overweight on, they are overweight on auto parts as well as two-wheelers. And two-wheelers they're bullish on iShares. Retail, private banks, small NBFCs, ICICI Bank, Bank of Baroda and LIC Housing are their top picks there. Marico is their top pick in the consumer stable. TCS is their top pick in the IT stable. Prestige Estates, they are bullish in from the real estate space. And in the telecom, they like both the Bharti twins, Airtel as well as Infratel. And they've added oil and gas to their overweight sector. And in that, they are preferring BPCL. Underweight on the small caps and mid caps, but the exception in small cap and mid caps that they like are counters like Dr. Lal Pathlabs, MCX as well as Voltas.
Okay, watch out for a clutch of these names. Now on to the newsmakers and the result boys of trade yesterday. Okay, let's start off with the results first, Nikki.
Yeah, good set of numbers coming in from Merck Electronics. Revenues have risen as much as 40-odd%. Net profit comes in at 12 crore as compared to a loss figure that we were looking at in the corresponding quarter. EBITDA has a multifold jump there at 20.8 crore as compared to a number of 7.3 crore. Margins have expanded at 10% as compared to 5%. Strong revenue and high operational profitability has trickled down well in terms of the bottom line performance. TCPL packaging, not a good set of numbers there. Net profit has come down by 43-odd%. Revenue which has risen by 13%, and the loss or maybe the inefficiencies keeping in from the operational performance of the company, which has come down by 16-odd%. Balkrishna Papers, again not a good set of numbers there, though the losses narrowed down a little bit, but then the revenues pretty much remain muted. It's seen the revenues have come down by 14%, and the company has reported a loss of nearly 10.3 crore as compared to a 4-odd crore figure in the corresponding quarter. And Videocon Industry, for that matter, there also losses have widened at 886 crore as compared to 369 crore in the corresponding quarter. Revenues have come down by 43-odd%. EBITDA is down by 67%, and margins, for that matter, they have also contracted at 6% as compared to 11% in your base quarter.
Thanks a lot for that. What are the stocks in news today, Shraddha?
L&T Finance at the top of the list, of course, where Bain Capital's arms are looking to sell 3.9 crore shares in the company. And according to the term sheet, the offer price will be between 180.5 to 188. Now, that would be a discount of about 4% to yesterday's closing price. So that seems like a slight negative. Quest Corp, which is going to be buying 51% stake in Tata Business Support Services for 153 crores. You also have two companies in the back of order wins, Simplex Infra, which is received an order worth 524 crores from NBCC, and ARSS Infra, again a small order win of about 87 crores. We're also tracking Infibeam, I forgot that one, which according to a ET report is said to be in talks to sell a minority stake to Fairfax Holdings. So that news could keep that stock buzzing. On the back of bulk deals, you have a company called BCL Industries and Infrastructure. That's an edible oil company with a market capitalization of about 155 crores. It's Porinju Veliath who has bought 2 lakh shares yesterday via bulk deal, and you have Mercator where Nomura has sold 41.2 lakh shares. So again, these are some of the names where we could see some reaction.
Yeah, BCL is the interesting one. Porinju has bought himself. Equity Intelligence's fund has bought another 4.5 lakh shares as well. So that's a sizable deal.
Even Ashish Chugh has bought the third name, Om Prakash Chugh. That was Ashish Chugh.
Oh, okay. So
that'll be interesting.
A clutch of hidden gem investors who bought into BCL. Okay, watch out for this one. And Samit, watch out for Jet Airways as well.
Yeah, so the 5 important key takeaways from the analyst meet of Jet Airways are, now the company is expecting the available seat kilometer to grow at in the range of 8 to 10% on the back of fleet addition, which will be largely in the domestic market. They're expecting the cost available per seat kilometer to decline in the range of 12 to 15% over the next 3 years, led by renegotiation of maintenance, sales and distribution contracts and on the back of unbundling of service to make tickets affordable, and by rationalizing the business class. Now, this cost was around 3.22 rupees per kilometer in the first quarter of financial year 2018. Also, the company is saying that the new MAX 737 airplanes that the company will be adding will reduce the fuel cost by around 15%. Now, that will make the fuel cost cheaper by around 15%. Also, these new planes will be addition of these new planes will be funded by sale and leaseback options, and the free cash flow that the company will be generating will be used for debt reduction. Lastly, the company also said that going forward they're expecting lower rental costs on the back of the recent India's rating upgrade by Moody's.
Okay, thanks a lot for joining in, all of you, and giving us a lowdown on all the key stocks that matter. Let's start off with the one that we spoke last and speak to Mayuresh Joshi about it. Mayuresh, good morning. Thanks for joining in. Jet Airways nudging new highs, has almost doubled in the current calendar or the financial year as the case may be, and the analyst meet takeaways seem to be very interesting.
Morning, Neeraj. Yes, I think the takeaways seem to be very, very positive over a longer period of time. But as the management themselves put forth, I think a lot of costs probably go into the operating expenses of running the fleet. So I think a lot more depends in terms of how crude oil pans out. So the ATF accounts for almost 25-26 odd percent. You've got lease rentals which account for 10-12 odd percent. You've got depreciation to take care of whatever fleet that you've probably got it to account for, which is not covered. Third, again, I think about your parking charges, the regulatory charges. All these charges probably add up to around 85-90 odd percent. So I think the cost per available seat kilometer, as your analyst was mentioning, if that improves, I think that would greatly improve the yields of the company as well. And the revenue per available seat kilometer, at least at this point of time, has largely been skewed because crude prices were all over the place. So largely, again, I think if the cost per available seat kilometers does go down, I think you are going to see positive effects on yields. And as more penetration start taking place with new services coming through the new scheme of Udaan that the government has launched, you're probably going to see load factors improve as well. So longer period, I think the story remains very, very interesting. Short to medium term, I think it still remains patchy. So I think SpiceJet is something that will still continue to like on declines. And even Indigo, I think any new fleet that comes in with the A320neos, a huge cost saving in terms of crude and fuel efficiency coming through, aiding the revenues.
So you like Spice and Indigo. Do you like Jet as well?
I think Spice and Indigo is something that I like at this point of time. Jet, I think they really need to show their performance, Pradeep, in terms of actually reduction of costs.
So you prefer Spice and Jet, Spice and Indigo over Jet. That's the actually comment coming from Mayuresh. Mayuresh, also Merck Electronics, a smaller company. Numbers are quite impressive if you look at it, roughly 39-40% jump in profit. Market had not at all discounted it. In fact, stock was trading weak yesterday, if I remember it correctly. What's your view on this one?
Pradeep, sorry, I think I don't cover this stock, so very difficult to comment on this one.
Okay, another stock that will remain in focus today is L&T Finance, where Citi has opened book to sell stake. If price really falls because of this sell, will you be a buyer? Do you like this company?
Oh, I do like this company, and a disclaimer, I think we don't own this stock. So largely, again, I think the kind of strides that the company has probably made into different subsets of its business, I think it has done a commendable job. Secondly, I think the kind of pressures that we probably saw in terms of asset quality, I think those pressures probably are disappearing over a period of time. And third, I think if the price does correct, I think it does present long-term investors a good opportunity to start chipping in.
Okay, on our social platforms, Mayuresh, a bunch of questions that are coming in. I'm choosing one. There's a Sanjay Kumar Sharma who's asking about views on Tata Global and Mahindra Holidays. Let's start with Tata Global, actually. I don't know if you've looked at this company fundamentally, but the last 1 month or last 3 months, it's been a revelation of a move for this one. Is it pricing in all the potential benefits that will come in as a result of the moves that the company is taking and the Starbucks franchisee as well?
So to a large extent, Neeraj, I think from an immediate short-term perspective, yes. Secondly, I think a clear disclaimer again, I think we do own this stock in our funds as well. Third, again, I think the kind of strides that is probably taken both on the Starbucks franchise as well as foraying into different kinds of businesses, and the business is actually doing well in terms of the revenue potential that the company actually has. Yes, I think the long-term potential of this story looks very, very promising, but from an immediate medium-term perspective in terms of valuation, probably perfectly priced. But if the investor genuinely wants to stay put in the stock, I think the whole recommendation continues. I think we're still holding on to the stock. But any new investments probably needs to come in at declines because, as I said, valuation is probably looking fair from a medium-term perspective.
Okay. I think Hadrien Mendonca is with us. I'm just taking a bit of a segue into technicals a minute earlier than what we usually do, because I do want to talk about this one. And Pradeep, I think, had analyzed the charts of Tata Global, if I'm not wrong, a few days back. Okay, no, maybe I'm mistaken, but Hadrien certainly would have. Let's just ask him about his thoughts on this one. Hadrien, morning, thanks for joining. Before we get to the index, since we were talking about Tata Global and there is questions that have come on the social pages for this one, do you look at this one and is there more in store from a trading perspective?
Yeah, definitely Tata Global is on a tear, and the way the stock has been moving since the past 1.5 months, The breakout zone was close to the 160 level. Since then, the stock is never seen back. I think there is a lot more left. The steam is still left, because doing a strength and trend analysis, both these indicators are actually indicating that there is still more steam left, for the prices to move further ahead. So I think if you have a short-term perspective and if you have a long position, then traders should definitely hold on to your long positions. You could see a near-term target of close to 285 to 290 on a Tata Global.
Okay, the stock has finally moved after a long time, really, but it's kind of sustaining. Hadrien, what other stocks are you recommending this morning?
Yeah, we are pretty bullish on the metals. Once again, a lot of metal stocks are bringing a lot of steam into a lot of stocks. Along with the metal index itself, they're seeing a lot of strong recovery. Vedanta is one stock that we are pretty bullish on. The stock has finally broken out from an inverse head and shoulder pattern. If you do a lower time frame analysis and looking at the hourly charts, the strength and trend analysis also are indicating that the trend has definitely reversed after the breakout that we saw, and strength has also started building up gradually. So we'd go long on Vedanta with a stop loss of 309 and play for a short-term target of 325.
Okay, and Hadrien, most people that we've spoken to yesterday and today morning as well are using options to trade the index. Is there an index strategy that you have as well?
Yeah, Neeraj, previously when we spoke about Nifty, I was pretty surprised the way Nifty broke past the 21 DMA as well as the 50 DMA as if they never existed. But they turned out to be a blip, turned out to be a false breakdown per se. And since then, we've seen a very strong comeback from here. So both the supports that were broken have been recouped convincingly. They are sustaining above the 21 DMA as well. So I think from here on, your stop loss has to be 10,200 on the downside, whereas one can definitely play for an upside target of 10,400. But one thing I'd like to say, it is very important for the Nifty to surpass the 10,350 levels. That will act as a hurdle going forward. So once we see that mark being taken out convincingly, then I won't be surprised to see the 10,500 mark pretty soon.
Okay, so 10,350 remains a key hurdle for now, and beyond that, then we'll talk about probably newer highs for Nifty as well, like Bank Nifty has already done. But a key sector today would be logistics. Mayuresh, what do you like in this segment?
So Pradeep, I think a lot of stocks have moved up quite significantly, but from a bottom-up approach, Navkar Corporation is something that I'll still continue to like. The stock has actually underperformed both its peers as well as the market. But to a large deal, my own sense is that over the next couple of quarters, the numbers will really start flowing through. They've actually expanded their capacity on the ICD front by a substantial margin of almost 220 odd % to 10,36,000 odd TEUs. What it has also done is that the Vapi logistics and the ICD unit with rail connectivity will actually help in catering both to the import volumes at JNPT, where it is one of the three CFS operators. And thirdly, I think the South Gujarat bulk volumes, which it was not able to cater to, I think that starts flowing into through the Vapi ICD and logistics park. So my own sense is that over the next 2 years, the revenue growth of around 32 odd % not ruled out, and earnings growth of 40% in my opinion not ruled out, and an EPS of 12.5, 13 odd rupees is what the company can easily post on an FY19 perspective. So yes, remain extremely bullish on the stock. My own sense is that there is huge potential in terms of a stock price over the next 2 to 3 years on this one.
So 15 times FY19 EPS, if indeed the Mayuresh's numbers work out to be true, that's probably not a bad number for a company which might be growing lock, stock, barrel. Actually, a few stocks which have done that. Manish, I don't know if you track any of these, but we've been speaking to a few managements. One of them was Sterling Tools, which we spoke to yesterday, then Action Construction Equipment 3 days ago, a couple of others, I can't recollect the names right now, but very strong management commentary post a fairly strong quarter, and the stocks have been on a roll the last 1 month, but more importantly the last 7 days. Both Sterling Tools, Action Construction Equipment and a few others have really jumped big time. Do you look at fundamentally any of these names?
So I think Action Construction was one of my favorite picks over the last 1.5 to 2 years. And again, if you look at the kind of business model that they've got, they have market leadership position in few of the subsegments that they're working out of. And as private capex starts reviving, my own sense is that the kind of activity that you'll probably see in terms of asset turns that this company can post can be quite substantial. As the sweating of assets keeps on improving over the next few quarters, the leverage on the balance sheet automatically starts coming through, and that will get reflected into the return on capital that the company has probably invested both in its equipment and the overall business as a whole. So I think I remain very, very optimistic in terms of both an industrial revival as well as the kind of capex that the private companies will go through over the next few years. As industrial activity picks up, I think you'll see an automatic chain multiplier effect in terms of their asset turns and return ratios. So yes, I think ACE remains one of the stocks that I probably remain optimistic about over a longer term as well.
And are you also tracking Simplex Infra that received 534 crore rupees order from NBCC?
No, so Pradeep, I think a lot of these infra companies will receive huge orders coming through. Now the point here becomes how effectively are they able to execute these orders? Do they really have the balance sheet strength? So nothing against Simplex Infra again, but my own sense is that I still remain a little bit more biased towards other companies like Sadbhav Engineering, where it's got a very strong order book. The execution patterns have been extremely encouraging. And though the tax rates will get normalized in the second half, they enjoyed a large deal because of lower tax rates in the first half. It will not dent profitability because I think the kind of execution that the company and the management is hoping for will return to better returns coming through from their individual projects. So IRR should improve, which should lead to efficiency in terms of their capital employed, and that will probably lead to better performance going ahead. And even the other EPC players, my own sense is that KNR Construction has posted a brilliant set of numbers in the quarter gone by. 30% top line growth, you've probably seen more than 60-65% EBITDA and PAT growth. And though you had a one-off in the financial performance in the quarter gone by, the order book that this has seen, the debt equity at 0.14 times, working capital at 41 days, you can't ask for more.
Okay, still Mayuresh, lots more to talk about, but it's that time of the show when we get in a sense of what the Bloomberg terminal is talking about, and Jayesh Khilnani tells us a pattern that the terminal has thrown up on Reliance Industries, and he is identified. Jayesh, over to you.
Morning, Neeraj. So, the trender has in fact turned positive for Reliance, and I was going through the Bloomberg terminal. Of the 42 analysts that are covered, that cover Reliance Industries, 14 of them have a target price in excess of 1,000 rupees per share on the stock, and currently trading at just about 921. Let's have a look at how the trender actually works. It's a proprietary Bloomberg indicator which uses average true range as one of the key inputs for calculation. The decoding the trender is very simple. The green line is showing you the uptrend, and the red line shows you the downtrend. So the start of the green line gives you the buy signal, and similarly start of the red line gives you the sell signal. Now coming back to the chart of Reliance Industries that we have, you can see that as of yesterday's close, this candle has closed above the key resistance which was thrown up by the trender, the red line, that is thereby indicating a buy signal. Now if you look at the last 6 months, you have seen that all the red lines have been very short, and the green ones have been very long. So which means that the trender really works well when it comes to buy signal on Reliance.
Okay, and any kind of numbers, efficacy of this trender over the last 1 year?
Yes, Neeraj. So in all, the trender generated about 8 buy signals, out of which 6 made money for you, and the total profit during that period would have been in excess of 50%.
Okay, so that's the call on RIL actually coming from the Bloomberg terminal. Thanks, Jayesh, for joining us. So every day we give you this one interesting chart pattern from Bloomberg terminal, and trender is one of our proprietary indicators, remember that. So we'll watch out for Reliance Industries, but Jay Thakkar now joins in. Jay, which stocks are you tracking? We'll talk about index later, but first up, what are your stock picks?
Hi, good morning, Pradeep. Well, I have 3 buy recommendations as we continue to believe that overall market is either in a range of around 10,354 on the upside, as I've been saying that's 61.8% retracement, to around 10,200 on the lower side. That is this previous close. I would say last week's, I would say Thursday's close. That's quite important. So I think even if it is in range, we will see a good amount of stock specific movement, and I think one buy recommendation which I have is on SRF. The target on the upside is 1820. The stock has clearly broken out from a downtrend line resistance, and I think the triangular pattern will have a conservative target of 1820. So one can buy this with a stop loss of 1730. Second is a buy on GHCL, that is a Gujarat Heavy Chemicals Limited. I think on the upside one can look at for targets of around 270 in the short term, and about those levels 276 as well. And on the lower side one can place a stop loss at around 235. The third buy recommendation, Pradeep, which I have would be again from the cash segment. I would say one is on BF Utilities, which one can buy for a target of 553 with a stop loss of 478. I think these are the two cash segment buy recommendation, and one SRF which I've just mentioned is also there in the future segment.
It's interesting. BF Utilities has started inching up as well. You could argue that if real estate companies are going to do well, maybe some land bank owners could also do well. I don't know if that's the rationale for BF Utilities, but typically with this name, you don't quite know the rationale a lot of times, as you don't know with J Corp, which moved up big time in trade yesterday, up about 17-18%. It's an interesting assortment of stocks out there. Hadrien, any thoughts? J Corp, BF Utilities, or any of these others, which tend to flare up and have lasting patterns for 7-8 days before they tend to cool down again?
Yeah, Jacob is a very interesting one. In fact, the stock has actually clearly broken out because of the large move that we've seen on the daily charts yesterday, and it has seen huge volume action that we saw yesterday. I think this momentum will continue. In fact, the strength analysis also is indicating that the current strength is likely to be carried forward, and the momentum also will be carried forward. So I think J-Corp is well on its way to surpass the 150 psychological level going forward.
Okay, so it could head towards 150. In fact, the stock moved up by 24 rupees yesterday itself and is just $8 away from that mark. RIIL was another stock, and both these stocks often move in tandem, so we'll keep an eye on these two as well. But Infibeam, the company which is selling stake to Fairfax, that is the Vatsa company that owns stake in various interesting Indian corporates, listed companies already. Mayuresh, do you track Infibeam? Any views here?
I don't, but I need to probably look at the details in further scope to probably take a view.
Okay. Any technical view, Jay, on charts, Infibeam? How does it look?
I think yes, Pradeep. This stock overall, if you check, then it had a sharp decline a few weeks or months ago. I would say rather, but then the recovery has also been quite sharp. And I think the way the stock has recovered, the probability of this stock again inching higher is quite high. So I think one can keep trailing on the stop losses and continue to ride the trend till we don't see a clear-cut reversal in the medium term. On the upside, I believe that there is still a chance that what I'm looking on the charts is there's a probability that it can still inch higher, and we can see at least 10 to 12% on the upside is what I see.
Okay. Just before we get to the pre-open session, I think it's important to address the big boy Reliance Industries, the terminal indicating an upside too, and Goldman Sachs has raised its target on the stock as well by 26%, added it to the conviction list. Amit Johnson with the details of this report.
Now, Goldman Sachs has maintained its buy rating on Reliance Industries and have hiked the target price to 1,205 from 960. Now, this is the second highest target price on the street, and it's also way above the consensus target price of 950. Now, they have added the stock to convention list, and why they have done that? Because in Asia, Reliance Industries is the best large cap downstream company. On the back of now, this is the best large cap downstream company because of its sector leading earnings growth and strong competitive position. Now, though the stock has run up 60% year to date, they are saying that the core refining business is still at a discount to its peers. Now, they are saying that the company's EBITDA would double and would grow up over the next 3 years. Now, it is expected to go up to $14 billion by financial year 2020 from $7 billion in financial year 2017. Now, they are saying that the cash return on capital invested would revert back to its historical highs, and the free cash flow would turn positive for the company. Now, they're expecting the free cash flow to turn positive after 5 years with a yield of 6% in financial year 2019. Now, they're expecting free cash flows of $6 billion for the financial year 2019 and for the financial year 2020. Now, what will lead this financial growth? Now, with capex cycle completion, the brokerage is expecting the company's petrochemical business to be the key growth driver in the medium term on the back of higher volumes. Along with petrochemical business, it will be the refining margins which will outperform to peers led by its highest refining complexity, operational excellence and better cost positioning. Also, the telecom business, that is Reliance Jio, is expected to start contributing positively from financial year 2019. Now, they are expecting Reliance Jio's revenue market share to reach 20% by financial year 2021 and then to stabilize after that. Now, when you come to the valuation parts, refining, petrochemical and telecom are the key growth drivers for the company, and they are also using a 10% discount, and the main reason why they have hiked the target price is because of the higher multiple. They are using a higher EV to EBITDA multiple of 8 times when compared to earlier 7 times multiple.
Thanks, Amit. So that's the lowdown on Reliance. The pre-open rates have kicked in, and we'll start off on a positive note. The ICX Nifty anyways indicated that. So the Sensex showing a more believable 68-odd point uptick. Clutch of names this time around. We aren't starting with the large caps. Maybe you can look at what's happening to the cement names, the likes of Ultratech, Ambuja, ACC for starters. But the logistic companies would be firmly in focus. And let's see if those are reacting in the session today. So Gati, All Cargo, Mahindra Logistics, Navkar Corp, TCI Express, Blue Dart, all of these should be in focus today. Remember, they've had a bit of a rally, but that is not to say that the rally will not continue. Let's wait and watch for Gati in particular, up 7.5% in trade yesterday. Let's see if there is more in store. I think L&T Finance will also be in focus. Let's see if the pre-open rates already price in some downsides to this. So watch out for this one too. And Jet Airways amongst others, the takeaways are very positive from the analyst meet. I dare say, Pradeep, I want to see if BCL Industries has any reactions in the pre-open session. It's a small cap, tiny tune, but 5% higher, locked on an upper circuit. 115 is where that one is trading. Porin Juveliat and Ashish Chub are amongst the buyers in trade yesterday.
So only buyers as of now. Let's look at what's happening to the RIIL and Jai Corp that moved up yesterday, and also BF Utilities, BF Investment, two of the Bharat Forge Group companies, or Kalyani Group companies as we call them. So these stocks continue to hold momentum. BF Utilities is not really moving much. Infibeam, the company that is selling stake, should also be higher. No, it's actually lower, down 2 rupees in today's trade. Merck Electronics, looking at the interesting numbers, let's see how the market has reacted today. Merck Electronics is up 20%, so that's we'll see whether it holds. Cadila Healthcare and Shree Cement are two more companies in positive. Shree Cement now moving up after yesterday's decline. Mphasis is going to open higher by around 1.5–2%, and Havells India is weak, down 3% in early trade. Diwan Housing has corrected a bit, and so has Godrej Industries. So these are some of the more active, larger mid-cap names.
Well, we'll talk about the pre-open rates in a bit. In about 6 minutes, the rates will settle. For now, let's bring you the top newsmakers as well, and a special segment lined up a bit later on, so stay tuned for that. We'll give you the portfolio of a really large investor and the stocks that he's holding on to. But first, Saloni Dhanuka joins in with the big brokerage calls of the morning. Saloni, good morning.
Good morning, Neeraj. So first up on brokerages, we have BOB Capital on Somani Ceramics. Now they have initiated coverage with a buy rating on the stock and a target price of Rs 975, which suggests a potential upside of 15%. Now Somani Ceramics is the third largest organized tile manufacturer in India with a market share of 15% in the organized segment. Now a cut in GST rates on tiles from 28% to 18%, also expanding value-added portfolio and focus on growing in tier 2 and tier 3 cities remains some of the key positives for the company. On the back of these positives, BOB Capital expects revenue and net profit to grow at a CAGR of 12% and 23% over FY17 to FY20. Now they expect companies foray into sanitary ware and allied products will offer higher margins going ahead, and also companies' asset-light model will expand return ratios to 21.3% by FY20 from 19.2% in FY17. Now secondly, we have Morgan Stanley on Cyient. Now they maintain an overweight rating on the stock and have hiked the target price to Rs 620 from 565, which suggests a potential upside of 10%. They expect company to deliver double-digit revenues and EPS growth in the coming 2 years. Now, given the weakness in UTC account, which is its largest client and investor, dollar revenues have been cut. However, this will be offset by better margin performance, which will thereby lead to an increase in EBITDA margins. Now, they expect margins to improve in FY19 as the mix of business changes from legacy to integrated contracts. And lastly, given company's strong pipeline, they expect potential orders to convert in actual orders in the second half of FY18, Neeraj.
Okay, thanks, Saloni, for all these details. So, Scient will also be a stock in focus today. But let's move to the smart portfolio. Ashish Kacholia has made a name for himself, identifying multi-baggers in mid-cap and small-cap space. Where is he been investing and what he has been selling? Yatin Mota is here to take us through the list of Kacholia's bold portfolio. Yatin, morning. What is the detail?
Very good morning, Pradeep. We have started a new segment. This is bold portfolio in which we get you, portfolio of very large investors, marquee investors, and probably this will help us understand their investing style. Today we are talking about Ashish Kacholia and probably his reported portfolio along with the assets that he manages for the Burman family and other investors is cumulatively above 2,500 crores, and he runs an investment firm called Lucky Investments. Now, if you look at it, the kind of reported holding that he have, and if you look at the exchange data, the holding which is above 1% of equity gets reported on the stock exchanges. So we have a variety of stocks in which Ashish Kacholia is invested, and most of them are, mid-cap and small-cap names. And if you look at it, it starts with APL Apollo Tubes, Aptech, Ashiana Housing, Bodil Chemicals, and recently he bought a sizable chunk in Bodil. All of these stocks wherein he holds a little over 1.5% stake. We also have GTPL, a recently listed company into the cable and broadband business, wherein he has picked up close to 2.5% stake. KAI, this is one stock wherein he has been holding since the last 2.5 years, wherein he holds close to 3.1%. KPIT Technologies, and remember recently in the bulk deal, name had come up, so he is holding close to 2% stake there. As far as Moltech Packaging is concerned, that is one stock which has given phenomenal returns in the last 3-4 quarters. That is one stock wherein he holds close to 3% stake. Pokarna, that is one of the largest holdings that he has in an individual company, 7.5% stake. We also have SP Apparels, Time Technoplast, Vadilal, Vishnu Chemicals, all of these stocks wherein Ashish Kacholia is quite active and is a very large investors. Of course, his recent buys that I was mentioning, he holds a significant stake which he bought recently, which is Bodil Chemicals, KPIT Technologies, Vadilal, and also he increased his holdings in companies like APL Apollo Tube, GTPL Hathway, and KAI Industries.
Yatin, just a brief mention of what is he bought recently? Any sizable things that he's bought recently? I mean, small stakes that everybody buys. Anything large that he's bought recently?
Neeraj, that is surely KPIT Technologies, and he bought the shares at probably levels of close to 120. And today the stock in a matter of probably 2.5 months is up nearly 50%, trading at levels of close to 160, which is the recent high. 160, 170 levels. So KPIT Technologies, that is one stock which has recently bought a sizable chunk. His name, came up in the bulk deal segment, wherein you could make that he's bought shares. So close to 2% stake is what he bought in this particular IT company. And despite the kind of slow growth the company has been reporting, after he entered the stock, we saw almost a 50% run up coming in.
Thanks, Yatin, for all these details. So, Ashish Kacholia's bold portfolio is what we discussed today, and we'll keep an eye on other such big portfolios as well. But look at the markets now, which has settled down. Nifty at 10,330, very close to 10,344 mark. That is significant, as our guests have been also mentioning, because that is the high we made 2 days back and then slipped off from those levels. So let's see if we can cross it once the market opens. Quest Corp is one stock which is doing well, moved up 6% in today's trade. Bombay Rayon Fashion, Praj Industries, Bombay Dyeing, these are a few more stocks which are doing well in today's trade. Well, also if you look at VRL Logistics is another logistics stocks, but the total movement, if you look at the overall movement in logistics stocks, is 1 to 2.5%, not the 10% types that you expect. So probably market discounted a lot in the move that we had seen yesterday or maybe earlier.
Mayuresh, any thoughts here? Pradeep raises a valid point. There isn't too much of a big, not a large reaction to what is arguably 100, 200 basis points saving in costs for logistic firms.
So to a large deal, Neeraj, I think the stocks had moved up significantly, and that's the whole point. Again, you need to see value in terms of earnings coming through, and as that gets justified, I think the re-rating for all the stocks which have probably moved up continues. So I think TCI Express have been long-term favorite, but look at the moment that these stocks have given. So to a large deal, yes, I think agree totally with what Pradeep is saying. It just states what additional factors these stocks can probably gestate. But that's the whole point, I think. If you look at valuations and the earnings potential, Navkar presents a very sizable opportunity for an industry which is going to grow at a fast compounded pace over the next few years.
I want to mark, okay, so Navkar, remember viewers who are tuning in right now and trying to figure out what within the logistics space could look interesting. Mayuresh Joshi believes Navkar Corporation is a stock that people can invest into afresh from a 2.5, 3 year perspective maybe. That's where he believes the earnings traction will come in a big way. Just before we get to all you need to know, just want to mark one stock, Quess Corp. And that one, we haven't discussed it, but that's a stock in news as well, into a deal with Tata's for buying off a stake in that business. And 6% higher is Quess Corp, starting off very well. And this whole pocket, Team Lease, Quess Corp, etc., seem to be on a bit of a roll. But any case, we are minutes away from the market open, so good time to tell you all that you need to know to stay ahead in trade today. L&T Financial Holdings should be watched out for. Bain to sell about 3.9 crore shares at a price of 180 to 188 rupees per share. Citi is the underwriter to the deal.
Logistics companies in focus as the sector gets infrastructure status. Watch out for stocks like Concor, Blue Dart and TCI, and also Navkar, as Mayuresh has recommended.
TCPL Packaging, Balkrishna Papers report weak numbers, while Merck Electronics posts a very strong Q2. The stock duly reacting.
And Goldman Sachs raises price target on RIL by 26% to 1,205 rupees from 960 earlier. Adds stock to the conviction list as well.
Bharat Forge, IIFL, Andhra Bank and VRL Logistics will be the companies that will be meeting large investors in today's session.
And Porinjo Velia checks into BCL India, while Nomura sells a large chunk of Mercator.
And that's not surprising too. Baltic Dry Index has fallen off recently from the levels that it used to trade at. I think 15% downtick for Baltic Dry. But Quess Corp is an interesting one and not quite a trading stock. Hadrien, any thoughts here? The Quess Corps and the Team Leases of the world, the stocks have had a really good run, but they're not typically trading stocks. Would you trade them?
Yeah, they are not typically trading stocks, and they are also a little bit of illiquid in nature. But I'll be a little more comfortable with Team Lease. The stock is currently consolidating and very well managing to hold above its short-term moving averages. Given the illiquid nature of the stock, I think one can only try and buy these stocks and hold on for a delivery rather than try and trade. I see the short-term target on Team Lease close to 1940, 1960, whereas one can keep a little deeper stop loss close to the 1800 mark.
Okay, watch out for this one. 2 minutes left for the markets to start. Mayuresh, not too much time. We'll discuss the details later, but a quick summary of something that you would be comfortable making a fresh investment in.
So as I said, I think you discussed a lot of names. So specialty chemicals, and within that, I think Shri Pushkar on any significant decline looks very, very interesting. Bodol also looks interesting from the next 4 quarters perspective, with earnings expected to pick up. The Chinese factor still aiding all these companies. And SH Kelkar on declines. We had discussed this last week as well. But looks like a very, very interesting story. So any significant decline on this one becomes a good buying opportunity in my sense, because the earnings potential from Q3, Q4 can be quite substantial to the dampening effect that it has seen because of GST and international operations being impacted.
Okay, Mayuresh, we'll leave it at that. Thank you so much for taking the time out and joining us and giving us your perspective. Always good having you. Just before we start the markets, quick trading ideas from our experts. Hadrien, to you first. Your top call for the morning.
Yeah, I'll stick to DLF. The stock has definitely broken out from a long-drawn consolidation. In fact, if you see, the stock was stuck in this consolidation phase since May this calendar year. So I think one can go long in DLF, keep a stop loss of close to 223 and play for a short-term target of 236.
Jay, your top call for the morning?
I would like to add one more call, and that is a buy recommendation on PCF 130 call option. I think this is quite likely to inch towards the levels of 5. One can buy this with a stop loss of 1.10.
Which stock did you mention? TCS?
So PFC, sorry, PFC.
Okay, PFC is the stock. 130 call option is what Jay has recommended. 20 seconds for the market open.
Yeah, so watching out for a clutch of mid-cap and small-cap names. Not too many large caps in action today, but the mid-caps and the small caps would be very interesting to watch out for in trade. Here are the rates this Tuesday morning on our bourses, starting off with a bit of green, about 1/3%, exactly in line or almost in line with what the SGX Nifty was indicating. Banks, yeah, about 50 odd points, so pretty much in line. All the three large indices. Just quickly get the mid caps and the small caps as well, and about 1/3% apiece for each of these as well. So good start to the bourses. Let's see if this lasts. The heat map and a fair bit of green, not too many losers. The top loser is TCS, which is 1/3%, but not too many gainers either. But for Yes Bank and Reliance Industries, Yes Bank, after carrying on from yesterday's session, doing very well. This is the top name here. And then, of course, we have Reliance Industries, which is the second largest gainer in the session today. But not too many losers. I think that's the nature of the move today. As I said, TCS is the solitary stock above 0.5%. But let's get in some individual names going. The logistic names should come up on your screen. I think they are the ones that are firmly in focus, and the stocks that could be moving around or should be active on volumes, if not the price front. The infrastructure status to each of these names. So pull up any logistic company and you will see what I'm talking about. Be it TCI Express, Gati, All Cargo. A clutch of these names have had a really, really good run in the session today. So all of these names will come up on your screen. Gati 4.5, TCI Express, All Cargo, Mahindra Logistics. Each of these names should be having a fairly decent start. Should not be having a bad start at least. I think the bulk deal on L&T Finance has happened at 183, if I'm not wrong. Our flashes are saying that. And L&T Finance holdings should come up on your screen as well. Yep, 3% lower, so not surprising there. And just two stocks I want to mark before I hand it over to Pradeep. One of them is Quest Corp. The other one is Jet Airways. Both of these names should come up on your screen. Quest Corp, 9% higher, 945 and counting, so good one on that one. Maybe Team Lease too could be reacting, you don't know. There are just two stocks within this basket, so Team Lease should come up. No, not too much, but Quest Corp is up 9%. And Jet Airways, positive takers from the analyst meet, but the stock has, well, actually down about 4%. So a bit of a correction coming in. I remember Jay Bala speaking about this one, Pradeep, 3 days ago, and saying that he would initiate a positional short. This one is corrected from 725 to 689 currently.
Exactly. And look at some more stocks. Merck Electronics is up 11%, and so is ARSS Infra. So Merck, after the numbers, we were expecting an up move, and that has really happened. If you look at some more stocks, Simplex Infra, that received a big order, is up 7%. Provoke is moving up in today's trade as well. Praj Industries is doing well, up 5.5%. We spotted that in the pre-open as well. Williamson Magor, this stock is up 5.5%. Well, doesn't really move with good volumes very often. Today it went up by around 8% and has cooled off a bit actually within the last 2 minutes of trade itself. Gammon India is yet another interesting gainer, so to say. If you look at some of the losers in today's trade, 5 Paisa Capital is locked at 5% lower circuit. So after relisting, the stock is actually declining. Pincon is also locked at the circuit. Jet Airways is now down 4.5%. HEG is not at the circuit but down 4% nonetheless. And also Tata Tele, that's the usual loser. L&T Finance is trying to stabilize at around 182 odd level. So these are some of the key movers this morning.
Okay, let's get in a very special voice. Manish Sonthalia, Director and CIO India Zen Fund and Head of Equities at the Motilal Group, joins us right now on the show to talk about his thoughts on the markets. Manish, you've been traveling a lot. It's been difficult to get you on air as well. What's happening? I mean, are people pouring in money by the dozens? And if so, are you having difficulty deploying that cash?
Also, domestically the cash has been coming thick and fast, and that is a story which has been continuing for the last maybe 1 year or so. And now we are trying to raise some offshore capital as well, so overseas traveling is happening, and that's the main reason. Maybe a few days every month we are out of the country trying to raise some capital. So that's out there. But coming to given the cash that is getting deployed in the markets, etc., it's difficult to find ideas at these levels, given the valuations and the earnings, whatever we are seeing all across. I mean, the current quarter numbers have also just ended. I mean, the September quarter numbers, and for the half year, I mean, it has been anemic growth. But let's hope that, the second half of the year, we should see some earnings pick up, and that would mean some decent earnings growth from a YOY perspective, FY18 to FY17. I mean, that should lend some support to the markets.
Okay, as you said, you have been trying to get some foreign investors in, but most of the big FIIs that we have spoken to of late, they find India relatively expensive. Are you really able to get capital from overseas?
No, it's been a tough call. Yes, the concerns are on the valuations, and because their money is fungible in emerging markets, so you'd have a South Korea or let's say Malaysia, etc., which is far cheaper than India. For a decent amount of growth that these economies are also presenting in the stock-specific companies, you have decent stock-specific companies, reporting something like 18 to 20% sort of a growth, and the P multiples are very reasonable. So their capital being fungible, I mean, India is definitely out of place as far as the radar for their capital is concerned. But what they are saying actually is that we would wait for the earnings to pick up, and then we'll take a call again, because India's story, a $2.5 trillion economy, seems much more structural than many of the smaller emerging markets. So demonetization, GST, these are things which would have disrupted earnings, and they were having a wait and watch approach. Maybe they are keeping a wait and watch approach even now. But I mean, the thing to watch out for is the earnings momentum to pick up, and maybe then they will start looking at India.
Manish, if the last 3 or 6 odd months, if there is one pattern that is emerging, is that a lot of businesses or a lot of themes wherein earnings were absent hitherto and are now starting to come back are making those extended moves. We've seen that happening with real estate, we've seen that happening with mid-cap IT, we've seen that happening with select infra names as well. Is that a pocket that you would now start going down to? Because from whatever little that I know, you've been betting on the good businesses, established businesses, not looking at those gruesome businesses. Are you tactically putting in some money to work in areas where earnings recovery might be happening, businesses which hitherto were probably not looking all that exciting, but the cycle may be turning around?
Yeah, so our style of investing, we are not going to compromise on quality. I mean, that is for sure. But having said that, we are not averse to looking at any business per se, and that would include infrastructure companies, etc. So, what we would watch out for is what the margin profiles are, whether the company is getting advance against the orders, what is the working capital cycle, and so on and so forth. And we like a few companies in that space. But coming to a point whether, these are the under-owned sectors in the markets, and once the earnings cycle starts to pick up, and this is extrapolated from how we saw the last earnings cycle. Today we have around 35-36% of market invested in financials, and it's an over-owned sector. I mean, my sense is that over the next 1 year, maybe financials are broadly going to underperform, and you have some of the under-owned sectors, so-called hated sectors like IT, pharma, being under-owned and fundamentals being not that bad, and the valuations being what they are, almost at rock bottom levels, and infra space, etc., totally overlooked. I mean, these may be the spaces, the industrials, they may just find favor and may outperform the markets over the next 1 year.
That's interesting, Manish, because typically, I mean, aside of the fact that yes, over-ownership and under-ownership would play a part, the earnings growth would play a big part. Where within the financial space do you believe earnings will start coming off, if they do in the first place? Because it's a very wide basket now. BFSI, as you rightly mentioned, the weightage is high, and the buckets within that BFSI space is really, really large.
No, so Neeraj, what is happening is one thing. All this while we didn't see earnings growth, and because of lower interest rates in the global system, we saw PE multiples re-rate. Of course, the cost of equity being lower, and if you discount your DCF by a lower rate, the valuations tend to be higher. All of that might just be ending. You have inflation hitting 4%. You have the twin deficits come through. The current account deficit is high. Fiscal deficit in all probability will slip. And inflation is rearing its head. Oil is closer to $60 again raises a red flag. Multiple re-rating story is over. So once we see the earnings cycle kick in, all this while we didn't see earnings cycle kicking, but now from the second half of this year, we'll see earnings cycle kicking. But at the same time, there'll be P multiple either status quo or de-rating. So you have to balance both these things. Coming to financials, the private sector banks would still be growing maybe 15, 18, 20% sort of earnings growth. But what do you do with the valuation? Valuations are not particularly very cheap. And if you see some P multiple contraction on private financial and NBFCs, and more vulnerable are the NBFCs rather than the private sector banks per se, you will see at best a flattish sort of return for the next 1 year. Of course, PSU banks again is one space where a whole lot of things are happening, recapitalization, etc. But growth is still an issue, but it is an under-owned space, so that might be a tactical play on the up move. But the structural stories of NBFCs, private sector banks, may be in for tough times over the next 1 year.
But IT, as you mentioned, is more of a defensive play in an otherwise overvalued market, or is it really something that you intend to hold for next 5 years and expect significant outperformance?
So the hike in visa cost, etc., is all there in the price. Companies have taken margin hits. My sense is that US spending pattern on the IT front is only going to increase come FY18 or let's say calendar year 2018. And that positive surprise is not yet built in the IT names. So, and valuations are factoring in zero growth. I mean, in the current circumstances also, the companies are delivering single-digit earnings growth. If we were to see the spending pick up in the IT names, and particularly the US, you're going to see more growth than what is being anticipated this far. So, at least for the next 1.5 years, we can broadly say that you won't see the prices fall from these levels. How much of a rise will happen from these levels, only time will tell. But most of the negatives are there in the price of IT stocks.
But just a follow-up there, Manish, would you kind of place the IT sector as a bucket which will benefit out of this, or would there obviously would be specific themes, but are there more focused themes that people will have to bet on? Earlier, the IT space at large moved up in the same vein. What we've seen in the last 6 months is a chalk and cheese behavior between large cap and mid cap IT. Would that hold true if indeed the entire basket of spending for the sector goes up as your premises?
No, so the companies should have a differentiated strategy. The verticals which they are present in, and what is the traction in each of these names. Time and material sort of a contract is more or less a commoditized sort of a play. We are talking about the ERP and A&D sort of AMC sort of contracts which happen in the IT name, but value added stuff, fixed price contracts where there's more value addition, those niche names will actually stand to benefit. On the other hand, the commoditized plays may stand out to lose. So whether it be the large cap names or the mid cap names, I think differentiated strategies and verticals where these companies are placed, if it is something to do with engineering services, etc., they'll stand to do better than the run of the mill, typical time and material sort of contracts which these companies might have.
Mm-hmm. As you talked about some of the old economy sectors, logistics is one sector which is in news today. After getting infra status, do you think this sector will really outperform?
So the benefit comes from lower interest costs. Many of these names are debt free. So if you take, let's say, Concor, it's virtually debt free. It's debt free. It's not virtually debt, it's debt free. You talk about TCI Express, it's debt free. So, these would benefit those companies where there is leverage on the books, and these leverage would come at slightly lower rates, which will augment the earnings. I mean, that's the only difference that you can anticipate at this given point in time. And that's about it. Long term, yes, I mean, logistics will play a major role because in our economy, we spend 13% of our GDP in logistics costs, which is one of the highest in the world, and it needs to be rationalized, and GST will provide an enabler for the logistics industry, but that's a long drawn thing. It's nothing to do with, in the short term. And in the short term, it's more of a sentimental thing because many of these names are actually debt-free.
Okay, to talk about the other hated sectors, infra had been one, but of late we have seen some improvement, at least in the price performance and the order inflow. What kind of stories do you like in this space?
So infra, we like companies who are actually catering to the EPC part of road building, etc., where margins are good, where there's lessened working capital requirements, where there's advance that is taken against orders. I mean, those sort of companies will stand to benefit. Of course, we know the ordering pipeline is pretty strong on the railways, on the roadways. There is genuine action which is happening in these two verticals. Any company which is more focused on these two verticals will stand to gain.
Manish, just before we wrap up, a final question really. I know you don't talk stocks. I'm just wondering if you'll make an exception, because yesterday on Bloomberg Quint with this whole story of how there is an Indian auto company which has actually given Tesla a run for its money in terms of the performance and how well preferred it is across the globe. It's a company that you had identified long ago, and that's Eicher Motors. Any thoughts here? I don't know if you are at a liberty to talk about it.
No, so Eicher is one stock which we have held for long, and we're still holding it. We think that the company has not yet peaked in terms of earnings growth, and there's a long way to go, because the potential customers for Eicher is around 2.5 million, and there's upgradation, etc., which is also coming through. We are not talking about the classic 350. We are talking about upgradation in the CCs which the owners already own, and there's a long way to go. The second round of capex, etc., will happen. So I think earnings growth of 20-25% will come through. Now it's trading at 1 PEG, and there's a long way to go. And now the CV cycle is also turning positive for the company. All this while only Royal Enfield was firing for the company. Now, if you look at the last quarter numbers, the CV side, the Volvo Eicher VECV venture has also done well. So that will only aid the earnings growth. So we remain positive on the stock. I mean, there's no doubt that we'll hold the stock for quite some time now.
Okay, thanks a lot for taking time out for us.
Thank you.
And let's look at what markets are actually doing. Nifty has not been able to cross that 10,344 mark that our experts have been talking about. We are at 10,335. Although I think the futures premium has kind of expanded to 30 points from 25 yesterday. If you look at some of the leaders in today's trade, you have Reliance leading this uptrend, up 2% now. Tata Steel, Vedanta also participating, so metals are positive, and Tech Mahindra is also doing well. These are some of the key gainers when it comes to Nifty. Outside the index, you have Bombay Dying, you have McLeod Russell moving up. These are some of the key gainers over the last few minutes. NCC and NBCC are also doing well, and so is Oberoi Realty and also Tata Coffee. So tea and coffee stocks are doing well in today's trade, and some infra names and some real estate stocks that have really moved up. So that's how the market looks like. Positive opening for us, and in fact futures is now moving above 10,360.
Okay, we slip into a break on that note, but on the other side we discuss the demand for personal loans with Shanti Ekambaram of Kotak Mahindra Bank, and a bit later on about the transition to a small finance bank with Amit Ghosh of Ujjivan.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
business news, where news for business people.
Welcome back. You're watching Indian Open. We're getting into our leg of corporate discussions, and we actually got two banking finance discussions coming up. We'll start with a discussion on what is happening in the personal loan segment. Before I introduce my guest, I just want to tell you why we are talking about this. There has been a trend which has been playing out in the market where personal loans, of course, have been outstripping the growth in non-food credit. So if you look at the latest data from the Reserve Bank of India, this is the September year-on-year numbers. Non-food credit growth was at 6.1%. But personal loans grew at 16.8%. And the RBI classifies personal loans in the following categories. You will see those on your screen. So within that personal loan segment, consumer durable loans, which in the past used to be a big play, have actually not grown. They've degrown. Housing loans grew at about 7.6%. Vehicle loans at about 9.2%. But the real big growth has been coming in credit card loans and other personal loans, which tend to be unsecured loans. Now, this is not just a September trend. This is a trend which is mapped out over at least the last 12 months or so, where some of these categories are growing faster than others. Joining us to talk and help us understand what's going on here is Shanti Ekambaram, President of Consumer Banking at Kotak Mahindra Bank. Very good morning to you, ma'am. Lovely to have you here on Bloomberg Quint. Yeah, I first want to ask you whether the kind of growth that you've been seeing in some of these segments, in the credit card segments, in the other personal loan segment, this is all going by RBI data, is surprising or away from trend to you, or do you think this has been the way it's been moving for some time now?
I think if you look at the last 2 to 3 year data, Ira, you just talked about the 12-month data. The personal loan segment actually has grown in the range of between 16 to 20%. So India has been consuming, the urban and the consumer has been consuming, and they typically take these loans for their lifestyle needs, for travel, for holidays, for margins, for various things that may need. So you have been seeing the increase in trend of these loans over the last 2 to 3 years. So it is not just a 12-month phenomena where you have seen, a lifestyle consumption goes up, and I think that is what mirrors the trend.
Okay, so ma'am, now let me start getting into some of the sub-segments. Now, there used to be a time where consumer durable loans were really big, but that segment actually has become de-emphasized, and even when you talk to people, they're not focused there so much anymore. Why is that, ma'am? I mean, is the demand or the interest from the lenders end shifting towards more unsecured loans? I mean, I know even consumer durables would have been unsecured, but things like car loans, which people used to prefer to give, are they de-emphasizing that and moving towards unsecured and other personal loan segments, as they're called?
No, actually I'm surprised you say that, because if you saw October probably saw the highest ever consumer durable loan growth that you could have seen. Obviously there was a October, because you saw the festive season and people typically go out and buy. If you look at the entire retail lending segment, Ira, you've seen car loans have grown, you've seen home loans growing, you see personal loans growing, you see credit cards going, and obviously consumer durables are going. So if you look at the underlying pattern of all this, basically consumption as a theme has continued to be stable and growing. What is happening if you look at the overall space is that corporate activity and investment activity has been low, while the consumption has been stable overall. Urban consumption has been stable and growing. Thanks to 2 years of favorable monsoon, rural also has become a little more stable. So you're seeing growth in retail consumption across the segments, and thus lending is mirroring across the segment. So it is not one at the cost of the other or one in lieu of the other. So you're seeing a broad consumption theme play out, and financing is just an enabler for the consumption theme that's playing out.
I get that, ma'am, but is unsecured as a part of that consumption credit going up again?
I think if you look at it overall as a segment, unsecured loans, I think about 2 years ago were about 5% of GDP. Today they're about 7% of GDP. India's GDP is also, reasonably growing and is expected to grow. So yes, unsecured loans have grown, but have they grown at the cost of the others? Probably not.
have they grown in a slightly different manner than they did prior to the global financial crisis, which after which we know that we saw some jitters on the unsecured segment? A lot of people you talk to, particularly on the NBFC side, ma'am, say that now our ability to assess credit is strengthened. Do you see it that way?
So there's a difference between 2007-8 and now. One, bureau data has made retail lending significantly more organized because you have details and data about individuals lending, their CIBIL scores, and you know what exactly is happening in terms of their leverage and their borrowing. Second, credit appraisal method you talked about. Today you have other data, right? You have transactional data. Say, for example, as a bank, we sort of lend a very large to our existing customer base. So you have transactional data, you have social data, you have scorecards that have come. So I think the manner of lending has become more organized, and with bureau data, in terms of data availability for lending unsecured, it is very different from 2007 and 8. And third, like I said, post 2007 and 8, there was a lull in the consumption. The consumption has picked up in the last 2 to 3 years. It has continued to be stable and growing. So yes, because of the availability of organized data, because of the availability of other, what you call, transactional and other data, you are able to sort of put a scorecard and ability to lend much more than perhaps in 2007 and 8.
Shanti, good morning. Neeraj here, joining in the discussion as well. Do you guys have a model to predict, or past experiences which would probably enable you to figure if this lending cycle could well continue? Because as you said, one thing that we gather is that the nature of the Indian consumer is a lot different right now. More willingness to borrow and spend for today as opposed to saving for the long term. And two, the penetration levels would also be different, and the income levels of the tier 2, tier 3, tier 4 towns would also be much more different than what they were back in 2000, 2008.
One, economic growth. B, jobs. 3, income streams. And 4, lifestyle aspiration. If you look at all 4 of them relative to 2007 and 8, they are significantly different. And each and every one of them contribute to what you call the consumption demand, and thus the demand for financing. So you certainly have seen that as economies grown, as long as jobs remain stable, people's earnings are going up, their aspirational value has gone up, and they will borrow. Even today, if you, for example, look at India versus the developed economies, roughly household debt to income is just at about 36-37%, while if you look at US, UK and Japan, they're all above 100%. I'm not saying we get there. Second, a large part of the Indian household borrowing is still for a home. Right, and I think Credit Suisse had put out a report recently which said that a large part of the borrowing is still for home. The lifestyle and the aspirational borrowing is still relatively a smaller portion. Yes, it is higher than what it was in 2007 and 8, but housing still forms the largest portion of the household debt, and household debt to income is perhaps at around 36-37% of the GDP. So if the economy continues to grow, if jobs continue to be stable and growing, which I expect in a growing economy, and income obviously goes up, consumption will go up, and so will the financing and the aspirational value. And you're talking about urban, you're talking about tier 4, 5, 2, 3, rural. You're seeing aspirational value go up across, and this is just reflected even in the whole e-commerce story, when you find that tier 2 and tier 3 towns are really sort of buying up a lot of the products.
Okay, so I had a follow-up question, but I think she's already answered my question. She believes it will continue.
Okay, ma'am, but okay, so coming back to the sort of question of the manner in which this lending is taking place. So, for instance, at your end, what is the lowest sort of CIBIL score above which you are lending, and is that markedly different for, say, the NBFCs? Because there is everybody in the market, in the retail credit market right now. There are NBFCs, there are banks, PSU banks. Everybody's playing in that market because, like you said, there is hardly any corporate credit demand. There seems to be too much competition.
I can talk about banks.
Okay.
Bank like us and most banks largely look at lending to their customers, both existing as well as new customers that they keep acquiring every month. Now, when you lend to your customers, you have transactional data, you have their account with them, you have a lot of data availability, you have CIBIL scores. Now, you can't say that, okay, I will lend 700 and above CIBIL score. It's easy to lend, right? But if you go below 700, you will have to support it with other transactional data. So it is not just about CIBIL score. Lending is about a whole host of other factors that you take into account, what the person's, where the person is, what are their jobs, what is their income, what is their debt, what is their capacity to pay, etc. So a large part of the banking sector lends into their customer base and their incremental customer base. Now, non-banks, I mean, like I said, I can't comment on the non-banks. Second, there are newer markets. Most people are operating just in the top, 10 cities. Then you go to the next 15 cities, to the next 20 cities, then you go to the next, 20 cities. So India is a very large place, and as you know, underbanked and underleveraged. So some of the others, particularly the NBFCs, are finding newer and newer markets to go to where banks have operated in certain markets. So I think it's a mix of all of this.
So you don't think there's a risk of, say, the NBFCs lending over and top, the same segment that banks were lending to? You go back to a microfinance kind of scenario where multiple lenders are lending to the same segment, and while at an economy level we may not be over leveraged, we certainly are not, but that consumer segment ends up getting over leveraged.
There certainly could possibly be at a risk. I don't think it is now, but you got to watch how it goes over the next 2 to 3 years. Anybody, having multiple lending, multiple borrowing and living beyond their means basically is at a very logical basis a problem. I don't think that the system is there yet, but if you go over the next 2 to 3 years, depending upon how people, and see, ultimately it is about philosophy of risk. Even in the wholesale corporate segment, there were many banks who did not get impacted by it, right? So just like that, as long as you have your risk philosophy, policies, diligence, and lending practices and underwriting practices, within a certain framework, I think you can continue to sort of grow the business.
Ma'am, one specific question on the credit card segment. Now again, there we've seen outstandings, based on the RBI data, go up quite a bit. But the general understanding is that the rollovers have not really increased. And the other thing is that debit card usage is up very significantly as well. Can you tell me what you've seen at your end on credit card, whether rollovers are better than earlier, slightly, they're increasing, or they're more or less steady?
So there are two things you must know. What happened post demonetization is people in India started using their cards significantly. First was debit card, because credit card penetration is still relatively low, while everybody who has a savings account has a debit card. Debit card usage went up dramatically, while it came down a little bit post demon around maybe June, July, but even now as a percentage of usage significantly higher than what it was last year. Similarly, people who had credit cards started using credit card as a means for payment because it was very convenient. But a lot of people pay within that, 30, 35 days, while many of them roll over. So as far as rollover is concerned, I'd say there has been a marginal increase, but usage of credit cards certainly has gone up, both debit and credit cards. Different banks probably face different scenarios, but rollovers have gone up marginally, but an overall spending base has gone up significantly.
All right, ma'am. Interesting discussion there, what's happening on the consumer credit side. Appreciate you taking the time to speak with us there, Shanti, Ekambaram, talking about the nature of consumer credit and how it's been evolving. It's been the one of the few games in town for the banking sector in the absence of large corporate lending. Now, the other game in town for the banking sector has been the new differentiated banking space. We are speaking specifically right now about the small finance banks. Ujjivan is among the large microfinance companies to have transitioned into a small finance bank, and we're trying to understand what that journey has looked like so far. Ghosh is MD and CEO of Ujjivan Small Finance Bank. He's joining us here this morning on IndianOpen. Good morning, sir. Thanks so much for taking the time to speak to us. So we wanted to speak to you away from earnings, etc., because in that, you get...
Good morning, Ira.
Good morning, sir. You get stuck in the minutiae of margins, etc. So I wanted to, have a slightly deeper discussion on what's been happening in terms of the transition, sir. I'm going to start with the transition on the liability side. Can you give us a sense of how easy or tough it's been for you to build or start building a liability base, sir?
Well, we have over 450 branches in microfinance when we started out, and we are converting our branches into small finance bank in phases. So right now we have converted about 108 of these branches, and from these branches actually we are offering the retail liability services, the deposit services, and it is our focus initially obviously is to onboard our existing microfinance customers and also open market customers, which are like in a 3-kilometer radius wherever the branches we have opened. So that's progressing well, but more importantly, I think from our perspective, we got a scheduled bank status, a couple of months back, and with that we are able to raise wholesale deposits at a much lower cost, and we've also raised CDs, etc. From the market, and this has helped us to reduce our cost of fund. So initially, on the liability side, the strategy is to replace a lot of our old term borrowings, which were at higher cost, which was grandfathered to the small finance bank, and replacing them with largely wholesale deposits and CDs at lower cost, and slowly build up our retail deposit base. As you know, retail deposit takes a long time to build, but we've introduced a lot of new technology in terms of handheld devices where customers can open accounts at the doorstep using eKYC and e-signature, etc. in less than 20 minutes, which sort of wows the customer, and we are able to attract a lot of new customers in that way.
Right. So say at the end of a year of operations, or maybe even 2 years, what do you think you'll be able to have in terms of CASA, sir, in proportion of your overall deposits?
Well, in terms of as a small finance bank, if you look at CASA, our focus is more on the savings because, as you know, current account balances are largely from large corporates. True. And it comes with cash management services, etc. So, which we will not have that much. We will have a limited amount of that where we are dealing with MSCs, etc., smaller businesses. So we'll get a relatively small portion of the current account. Yeah. But the savings account balances, obviously, we are focusing on. And I think in 2 years' time, it should at least be 20% of our deposit base.
Okay. Sir, on the cost of funds side, you're talking about replacing some of your earlier, borrowings which were at a higher cost. So, how much has your cost of funds come down, and in terms of your trajectory for margins from here on, what would you project?
So our cost of funds have come down around 2% already. From the original, between 1.5% and 2% from where we started as a small finance bank.
Okay, Mr. Ghosh, good morning. Neeraj here, joining in this discussion as well. From an investor's perspective, trying to figure out how sustainable, how long-term would businesses like yours be, and how are promoters of these businesses thinking of how sustainable it is? Because the constant chatter is about MFIs and SFBs being acquired or merged into banks as well. What would your prognosis be? What's the kind of growth rate that you believe businesses like Ujjivan can show over a period of the next, say, 5 years? I'm not really talking about what's happening over the next 12 months.
Yeah, see, first of all, the whole proposition of small finance bank is that it is a specialized institution primarily focused on financial inclusion. That was what the mandate from the Reserve Bank was, So we are focused on this large segment of customers who currently get serviced from the informal sectors, or we are not, are not serviced, are unbanked totally. So that's our primary focus. And over 5 years' time, over a period of time, we feel that small finance banks will convert into large mass market banks, because that is a market which is currently unserved, which was supposed to be served by the public sector banks, but they are not serviced, for various reasons of their own, they are not able to service that market. So that is a market which is wide open, and I think in 5 years' time, that is the market which we will capture. That's the objective with which the Reserve Bank set up these specialized institutions, and that's our also objective from very start, when we started Ujjivan about 12 years ago. In terms of growth rate, we feel that we should be able to grow anywhere between 20 to 30% every year on year, for the next 5 years.
Wow. And so therefore you would presume that...
I just wanted to mention,
Yeah, please finish your point.
Yeah, the question of merger does not arise because, this is a specialized institution, whereas, banks like very successful banks in the private sector have been set up with a different set of objectives, with a different target customer base, and they've done very good job, in that. But there is no alignment of purpose and target market between small finance bank and the successful private sector banks. Now, there's talk about merger because I think Bharat Financial merged with, but frankly, for them, there was no option because, future as just as an NBFC MFI is limited. So I think the best option was for them to merge with another successful private sector bank. But that's not the case with the larger small finance banks like Ujjivan.
Okay. So
I think you answered the question at the back of everybody's mind, sir. There was a lot of speculation about Kotak Mahindra Bank being interested in acquiring you, but the clear answer from you is that you're not interested in getting acquired.
Right, and I hate to copy Trump, but I can say that was fake news.
Okay, sir. Okay, I have one last question, which is not in the realm of fake news. What are you doing on the loan book side, sir? I guess you have to diversify it over a period of time. And within that attempt to diversify, will you de-emphasize microfinance loans? In any case, we've seen some volatility in that segment. Are you going to grow that segment slower and perhaps the SME lending segment a little faster?
Yeah, see, we already started about 3 years back, both the affordable housing and MSME sectors, and we expect these two to grow at a much faster pace than the microfinance business. We are also looking into the personal lending business. That would be another vertical. So in 5 years' time, though we are not going to de-emphasize microfinance, but we feel that as a portion of our portfolio, that will come down to about 50%, and we are looking at using a lot of technology, which is there today in terms of digital finance and, the fintech companies which have introduced this thing, analytics, etc., in terms of building these new businesses, to a certain extent, I think the whole demonetization impact derailed us in the initial phases, but right now that we have sort of basically brought that under control, though the next 2 quarters, I think we should be able to finish that process in terms of managing the portfolio quality, etc.
Okay.
But right now we have started looking at new technologies, etc., to build these new businesses.
All right, got that, sir. Thank you so much. Really appreciate you coming down to chat for this morning show. Good insights into how Ujjivan is looking at their journey, and a clear verdict there that there is going to be no acquisition. So that denied. I'm sorry, this is turning out to be a bit of a banking half hour, but there's news on your screens. This is a Bloomberg Quint exclusive. I'm just going to flag that off and bring in Vishwanath Nair. Banks are going to be on an accelerated provisioning drive until the end of this fiscal. That's news coming in. Vishwanath is joining us on the phone line. Vishwanath, what have you picked up? What does this mean exactly?
So if you remember in August, the Reserve Bank of India had sent out a second list of stressed accounts which need to either be resolved by the 13th of December using existing restructuring tools or be sent to the NCLT for insolvency after the 13th of December. Now, we've had an accelerated provisioning for the accounts with the 12 large accounts which were first part of the first list of insolvency accounts. There the bankers got 3 quarters to provide against those assets because they were large assets and therefore large provisioning. But for the second list, the Reserve Bank of India has said that by March 31st of 2018, you have to clean up the whole book and provide for these assets under the same norm that they had issued earlier, which is 50% of secured and 100% of all unsecured exposures in these accounts. So that is what the Reserve Bank of India has asked the banks to finish it off before the end of this financial year, so that pressure at least goes off from the book and then they can look forward to growing the book in 2018-19.
Vishnath, very quick follow-up question, but the hit perhaps will not be as unanticipated as it was in the first list, because in some banks, in their cases, they already said in their numbers in September quarter that they had provided a certain amount against the second list already.
That's right. So State Bank of India and Union Bank, State Bank of India firstly said that they have already started providing against the second list of assets. Union Bank put out a list saying that these are we have exposures to these many accounts in the second list and we have to make certain provisions, and therefore they took care of whatever needed to be provided in the first list during the September quarter, so that doesn't flow into the December and March quarters later on. So as such, banks are already in the process of cleaning up their books and starting to provide for these stressed accounts. But during the December quarter and the March quarter, we shouldn't see that big an impact as one would have seen during probably when the first list came out.
All right, but provisioning will continue. Vishnath Nair, thanks so much for bringing us those details.
Quick 30 seconds, Ida, impact?
You saw higher provisioning in this quarter, in the September quarter. That means provisioning will remain accelerated in the December and the March quarters. Even if the NPA addition were to slow, you will see provisioning remain high.
But the markets would now preempt this because they would know about it.
They would have preempted this.
They would know about this. Okay, great. Just lastly, before we wrap up, keep in mind that tea, coffee stocks seem to be having a really good day. Tata Coffee is up 6.5%. I saw McLeod Russell somewhere buzzing in trade as well, about 5.5%. So that set of names seem to be doing okay. And amongst the large caps, Reliance Industries is up 1.5%. Bharti Airtel is up about a couple of percentage points. So do watch out for these. Technology seems to have made a bit of a comeback. Tech Mahindra is top of the charts when it comes to the index gainers. But with that, it's a wrap on this leg of Indian Open. Up next is the FNO show. Thanks so much for watching this leg.